Good morning. Today we are going to start a new chapter, that is share capital for class 12 CBSE. Now first of all, the meaning of the share capital. Share capital means the capital raised by a company by the issue of shares. Indirectly you can say that when that company needs money, in two ways company raise that fund. One is that issue of shares, another one is debt, means that company can take loans or borrowings from that outside banks or any other financial institutions, or company can issue debt in the form of debentures. Now shares could be two types, one is that equity or preference shares, but here in the share capital, when we are seeing on the issue of shares, we are going with that equity, not the preference. Now kind of share capital and the sense of equity, we are not seeing the preference shares now, just only the glance I am giving you. The equity shares is the ultimate owner of the company, and the preference shares, they are having preferential rights to get the dividend from the company. Now kinds of the share capital. So kinds of the share capital, first is that authorized or nominal or registered share capital. Now if the registered share capital, the name says that when the first time the company started, company authorized, company mentioned some capital to the memorandum. So in this memorandum, if it's mentioned say 100 shares at the rate of 10 each, indirectly company saying that I would issue 100 shares at the rate of 10 each throughout my whole life. Now the question arising, this could be changed? Yes, it could be changed if later you thinking that the share capital, authorized share capital, I should increase. Definitely you can increase by the changing, by the amending your memorandum. Okay, now come here, the authorized share capital could be categorized into two parts. One is that issued share capital, unissued share capital. The word I have used here, categorized, indirectly you should understand here issued share capital, out of that how much nominal share capital you have, how much you are actually issuing to the public for raise fund. How much you are not issuing, this known as that unissued share capital. Simple, this unissued share capital you can issue later sometime, later some days, later some year, that when you need it to raise fund again. So in issued share capital, it is nothing but I am offering the shares to the public to subscribe. Unissued share capital, that share capital still I am having with me, later time when company needed again, that time company can issue. Say here unissued share capital I can categorize into again two. One is that reserve capital, another one is unreserved capital. Indirectly says that say 40 shares I unissued. Out of 100 shares, 60 issued, remaining 40 unissued. So that out of unissued, I kept some shares as in the reserve form. Say 20 shares, these all are examples I have taken. So 20 shares I have taken as a reserve. That means of what? These shares I could not issue any time of that transactions or any time of the life duration of the company. When I am going to issue these, definitely the company when going to winding up, liquidation situation, that time I can issue this 20 shares to the public. This is known as the reserve capital. Reserve capital indirectly says that the capital you are issuing at the time of winding up or liquidation of the company. Due to that uncertainties, it could be possible the company not running their businesses. So that time the capital is shortage would be there. So that time I am issuing this reserve capital. Now come here the unreserved capital, 20 shares. So the 40 was unissued capital, here I kept as a 20 shares as a reserved one and 20 shares as a unreserved. These unreserved shares I can issue anytime when I need it. Now come here the issued capital, out of 60 shares at the rate of 10 each. So that out of 60 shares at the rate of 10 each, that company subscribed only 50. Say it is known as a subscribed capital. Example, if 60 shares I issued, it is not compulsory that the public subscribe full or public purchase this all shares, simple word. At that, if the public subscribed only 50 shares at the rate of 10 each, it is known as the subscribed capital. The shares not subscribed, that is 10 shares out of 60 at the rate of 10 each, that is known as the unsubscribed capital. Indirectly, this unsubscribed capital is still I am having with me, that is not purchased by any public. So that unsubscribed share capital goes to the unreserved capital and added back. So now with me 20 shares plus 10 shares, 30 shares I am having. Later time when I need it, again I can issue that shares. I hope understood. Okay, now come here the next part. Subscribe capital 50 shares at the rate of 10 each when I am calling to get the money from the public. I am not calling all the money together, that is 10 each, not I am calling at together. What I am doing, say example, I am converting it into the application money, allotment money, first call, second call, like that. So it is categorized as done like that. Say example, 10 rupees I have categorized as done 2, 3, 2, 3. So 2 rupees is the application money, 3 rupees is the allotment money, 2 rupees is the first call, and 3 rupees is the second call. Okay, like that I can categorize it. I am thinking that there up to 8 rupees I called. Say example, I am taking here also 3. That would be easy for you. So 3, 3, 2, that is up to and 2. Up to 8 rupees you called. Up to 8 rupees you called. Still second call pending. You can call later time when you need it. So called up share capital is that what? 50 shares at the rate of 8 per share. So up to first call I already called. Uncalled is that what? 2 per share. So that's why uncalled 50 shares capital at the rate of 2 per share. That I have categorized as done. Okay. Now 8 per share I have called. That means not that how much you called the public will pay at that moment. So some of the public or some of the shareholders out of that, it not possible to pay from that side, or it would be possible that the person is not found that notice and all. It could be possible. So that's why the paid up share capital say 8 per share. Calls in arrear, definitely 5 shares calls in arrear. So 5 shares calls in arrear, say at the rate of 2 per share. The person not paid only first call. So indirectly says that paid up share capital 45 shares at the rate of 8 per share full they have paid, but here that 5 shares they have paid up to allotment, not first call. So that's why 5 shares at the rate of 2 per share. I hope understood. Okay, next we are going to see that issue of shares. Some important points here we supposed to see. Let's see that one by one. One is that share nominal price. Say, let's say example as that rupees 10. It's otherwise known as the par value. Means that what? In the shares, when we are issuing any shares, what the actual rate of the shares we have fixes, that is known as the par value or nominal value. If issue more than the nominal price, say example, the reputation of the company is good or very good. So at that moment is that what? That nominal price I can excess of that. So in this what is that? Nominal price was 10 and I have taken extra 2 rupees. So this 2 rupees is known as the premium. So that I have fixes the price as the 12 rupees. So 2 rupees as the treated as a premium value. Next is that as per rule, equity shares are not to be issued on discount. So that if you're thinking about that rate of the share can be reduced also. No, it's not like that. Because of, as per the rule, before it was there that you can issue shares on discount also. But now at present that if you going to issue the shares, it would be premium or in par value, not in discount. Now, what are the entries actually we are writing? Here are only 2 important entries we have that entries are when the receiving any call money, it could be application money, it could be allotment money. Now the question arising there, what is the application money, what is the allotment money? Let's see that part also we are having here. when we are issuing shares, that the nominal value or the premium value total with what the money I am going to collect from the person or the subscriber, it could be categorized into that form. What is the categorization we have? Here that application money, allotment money, first call, second call, third call, and so on. Say example, the 10 rupees one share value. So I can categorize in the form of like application money rupees 2, allotment money rupees 3, first call rupees 2.5, second and final call rupees 2.5. I can do is like manner 2, 3, 1, 1, 1, like that also I can do that. That is company's rule, policies as that they have categorized in that total nominal value into how many parts. Now come here the entry. So entries are when you receiving money, definitely receiving money, bank or cash, receiving, you are writing bank account debit. So indirectly bank account debit to share, it would be application, it would be allotment, it would be first call, it would be second call. So anything, so bank account debit to share application account, it could be bank account debit to share allotment account, bank account debit to share first call, bank account debit to share second and final call, like that would be. So that this account, this entry is common for everywhere. Next, another common entry is that for the transfer or due entry. Why that I have written here the transfer or due entry? When first time when you issued the shares, first the person directly coming or the subscriber directly coming to you and paying the money, it is nothing but the application money. So that if any person showing interest to purchase of your shares, that person first paying the money and asking or giving the application for how many shares, it is nothing but it is known as the application money. So first time when you receiving money, definitely that moment you are writing bank account debit to share application account, share application account. That means of what? You are receiving first. After this amount, actually you are receiving on behalf of application. So that what you are doing this money, you are transferring to the share capital. That's why I have written as a transfer entry. So the share capital, when we are writing share application account, not allotment, share application account debit to share capital, like that. But the second time when that person's already subscribed, after that again the person first not paying the money, first the company calling the money, means that it's like admission. When you are visiting a school or a colleges for taking any admissions, first you paying application money, after that filling the form and you submitting to the school or the colleges. And after that the college organizations is finding that if you are a eligible candidate, the college or that institute giving permission to take admission, or can say that they are asking the next fees to be taken as an admission to you. So that is nothing but allotment as in the share. So the first application money you paid first. After that when the school or college is taking admissions of yours, that time the college is first asking money from you as in the form of fees. It's like that here for as in the form of allotment. So when you asking that time, when the company asking that time, it is known as the due entry. So I am writing the due entry first, after that you are going to receive. So the due entry, it is nothing but the same due entry and the transfer entry would be same. So in this time of that allotment, what should I write? Share allotment account debit to share capital. But this entry will come above of this entry. And after that you are going to receive entry. So that means of what? If allotment entry, if I am writing here share allotment account debit to share capital, this entry will come first. Next entry will come bank account debit to share allotment account. That's it. If you finding the difference between this and this, first what I have written in the application money, bank account debit to share application account I have written. After second entry is that what? Share application account debit to share capital. But at the time of allotment, what I have done? I have written first this entry. At the place of application, I have written only allotment. So that share allotment account debit to share capital account. Share capital account. Next entry is that bank account debit to share allotment account. So that means is that this is the due entry. and after that I am receiving that money from the persons. I hope understood. Let's see a small question. ABC company issued 2000 shares at the rate of 100 each, where application allotment money are 30 rupees, 20 rupees respectively. 25 rupees for first call and the remains on second call. All the money duly received, past necessary journal entries. So it's a simple questions we are going to see first. After that we will see that little more advanced questions. So issued shares, how much? 2000 shares at the rate of what? That 100 rupees as a nominal value. So now as per this, application money how much? 30, allotment 20, first call 25. So the remaining how much is there? Remaining 25 rupees will be there. Just you think about here, 30 rupees, 50 rupees, 75 rupees and 25, total 100 rupees. So the remains, check here, remains on second call, remains how much? 25 rupees. Now see that first one is that all the money duly received. So first entry, when that application money received, how the entries should be? Simple, that their entries should be bank account debit to share application account. So that bank account debit to share application account is nothing but what? Say 2000 shares into, at the rate of application money is 30 rupees. So 2 3s are 6, can say that 60,000. That's it. So that being application money received. So first we have received. Second is that what? I am transferring this money to the share capital. So now if I am transferring this money to the share capital, what the entry should be? Share application account debit to share capital. I am not bothering about that all spellings. I am not writing full form. I am writing only the short form. So please. So share application account debit to share capital. How much is there? 60,000. Done. First entry done. Application entry done. Now the second is that allotment. When we are taking allotment, so I told you that application time only the bank account will come first. So that at the time of allotment, this account, this entry will come first. So that the share allotment account debit to share capital. To share capital, how much? Again 2000 into allotment value was 20 rupees to 20. So that 40,000 rupees. It is the due entry because allotment money is still not received. When it's going to receive, that time what should I write here? I am writing here simple, that bank account debit to share allotment account. See that here bank account debit to share application I have written first, but now that bank account debit to share allotment comes second in allotment. So 40,000, 40,000. Next first call, again similar will be first entry only the bank account will come first, remaining all the time that the bank entry will come second. So that share first call account debit to share capital, amount is, now check, 25 rupees, so 2000 into 25, so that 50,000 rupees. Next receive entry, simple, that bank account debit to share first call account, 50,000 and 50,000. Next second call, simple, same, share second and final call, second and final call account debit to share capital. So again 25 rupees, 2000 into 25, so 50,000. The last entry is that receive entry, so bank account debit to share second and final call. There is 50,000 and 50,000. So now if you checking here that if the sometime the question asking that actually how much share capital you received, so that all the bank account you have transferred to or due entry to the share capital. So the simple that how much money you received, 60,000 you received here, 40,000 you received here, 50,000 you received here, another 50,000 you received here. Indirectly what? 2,000 into 100. 2 lakh rupees you have received. Just you check once. 60, 40, 1 lakh, 50, 51 lakh, 1 lakh, 1 lakh, 2 lakh rupees you have received. And this 2 lakh only I should transfer to the share capital in the balance sheet. I hope understood. Thank you.